Okay, so you're really wanting to buy your first property, but you're like, Dan, with interest rates like that, there is no way I can afford the payments. And don't you need maybe 5, 10, 15, maybe even 20% of a down payment? No, none of that is true. So let me go over and explain how I would purchase a house in 2023 or 2024. My name is Dan Frio. I'm a licensed mortgage advisor, licensed in all 50 states as well as Puerto Rico, and I'm here to assist you. So the first thing we want to look at is how can I get into a loan with the least amount of money? That's number one. And number two is how can I possibly get a lower rate? Is there a way to get a lower rate in today's market to just help me make that housing payment more affordable until real interest rates come down? So what we're going to go over today is exactly that. So the first thing we want to look at is the Federal Reserve. What the Federal Reserve has been doing, and this is why interest rates are so high. So this is what they call the dot plot. The dot plot is basically a chart here that you're seeing on the screen. And every time the Federal Reserve meets, all the members of the Federal Reserve basically put a dot next to where they expect interest rates to be in 2023, 2024, and further years out. Okay, so right now, the federal funds rate in 2023 is currently at 5.6%. And most of the Fed officials say that's basically right where they want it to be. If you go across here, the rate's 5.5%. You go across, and almost every one of them expected the rates to be right where they are right now. Okay, so now we fast forward to 2024. And then also look at 2025. And there's a reason why I'm doing this. If you look at the dot plots, do you see the inconsistencies here? Even the members of the Federal Reserve don't really know where mortgage rates are going to be or interest rates in general, but there is a consistent consensus out there that it will be lower than where we are today. Okay, and this gets changed every 4 months. But then you fast forward out to 2025, look where they're at. They're all the way down to, let's say right through here, about 3.75 to 4%. So 1 whole percent difference in rates over the next 2 years is coming. Okay, so that's number one. So we would like to get a payment locked in right now today for at least 2 years. Okay, so that's the first step. The next step is when you're buying your first house, you might think, well, I need 5% down, maybe I need 10%, maybe I even need 20% down. No, you don't need any of that. If you're a first-time home buyer, in most cases, you're going to read right up through here, we can finance up to 97% of the house's value. And you can see that right through here. Okay, so let me explain this to you. We can give you a loan at 97% of the house's value. Okay, so that means you need to come up with 3% of a down payment. Well, we've partnered with a lender that has partnered with Fannie Mae, who's actually giving you 2% of that 3% required. So think about it. You need, if you're a first-time homebuyer, you need to put down at least minimally 3%. Well, we're going to give you free money, basically, that's going to give you 2 of that 3%. So think of it, you're buying a $250,000 home. We're going to get you $5,000 in basic free money. What I mean by free is you don't have to make payments. It's not a lien on your house, and you never have to pay it back. And there is also no tax consequences. Okay, so this is the first program I would go with. I would look at our 1% down program, and I'm going to put a link to that video right up through here. So that's where I would start. So I would see if I get qualified for the first-time homebuyer program with 3% down with the gift of 2%. Okay, so now let's get over to how do we get you the best rate for at least 2 years until the Federal Reserve really starts to reduce interest rates. Okay, so what we're presenting right now is what's called a 2-1 buy down. Now you might see this all over the place, but it is truly, it's not really complicated, but it's really hard to explain. So I figured I would show it to you on the screen so you can understand the dynamics behind the scenes. Okay, so let's say in this scenario, we got you a $250,000 loan approved. Your rate was approved at 7.5%, and that means over a 30-year term. So that makes your monthly payment, when you take this divided by 12, it means your monthly payment on that loan would be $1,748, okay? So what we're gonna do is we're gonna introduce the 2-1 buy down for you, and I'm gonna show you how it works. So remember, your rate is 7.5%, okay? So the most common program that our borrowers are electing to do is the 2-1 buy down. Here's how it works, okay? So this means the 2-1 buy down means in year 1, your rate is going to be 2% lower than that 7.5% start rate that we talked about. So in year 1, your rate's going to be 5.5%, okay? In year 2, it's going to be 1% lower than that start rate we talked about up top. So your rate's going to be 6.5%, which is representative right here. Now here's where it gets a little complicated. Because you're doing this, your payment should have been $1,748, okay, because that's what it amortized up above, meaning if you broke out this into a mortgage payment or a loan payment calculator, your payment would come out to $1,748. But over here, because you're getting involved in this program, your payment's actually going to be based on a 5.5% rate, which is the 2% lower rate than the start rate up above. That means your payment's only going to be $1,419 for a savings each month of $329. Now, before you get way excited, that money's still due. You still have to pay it. Basically, we're just deferring interest to some other point in time. Okay, so the deferred interest that would be owed to get involved in the program for year one would be $3,943. Okay, now in year two, again, that payment only reduces 1% from that 7.5% rate that we have above. So your rate at that point for the year two would be 6.5%. So instead of paying $1,748 in year two, you're only going to have to pay $1,580. For a savings of $168. But again, remember, we're not just giving you free money for this. We gave you already the free money for your 2% down. So this is basically money or interest that's earned or is due payable, and it comes out to $5,957. Okay, so here's the technique I want you to use, and this is also for realtors out there. You go out and when you're negotiating a home, many times you're asking the seller to give you credits back, to help you with your down payment, or maybe help you with closing costs and everything else. This is what I want you to do. I want you to go out there and when you're negotiating the price of the house, I want you to say, Mr. and Mrs. Seller, I'm going to ask you for a seller credit. How much that seller credit's going to depend on, how much this number is going to come out to. So you might be looking at a $250,000 loan. If you are, so you're going to need $5,957 back in seller credits. Okay, so do you understand where I'm going with here? You're going to offer the seller of the property, X amount of money. But instead of negotiating to try to get a lower price, we're going to go to them and say, okay, I know you want $250,000 for the house, but what if we gave you $255,000 or $256,000 and you give us $6,000 back to use as credits to help me get into this 2-1 buy down program, to help me make this house more affordable for me for the next couple of years until the Federal Reserve comes down and reduces rates so then I can refinance, lock in that lower rate, and then I don't have to worry about it again. So that's how I would buy a house in 2023. I would couple our 1+ program that only requires you to put 1% down payment with our 2-1 buy down to buy down that interest rate for the next 2 years to make those house payments a little more affordable for you and your family. So if you'd like to find out more about me and my team and how we might be able to help you, all I need you to do is go to my website, therateupdate.com, and there's 3 ways you can reach out to us. One, it's the Apply Now button. You're going to click that. It's going to ask you a series of questions. And then you'll be routed to a specialist on my team to help you with your 1+ program, or you can even call us. You can scroll down to the bottom of our webpage and right through here. We have an 800 number. It's 844-775-5626, or you can just email me directly at dan@therateupdate.com. I hope you found value in this video and other videos that I did. And if you do, please, all I ask you to do is give me a thumbs up and subscribe to my channel if you have not yet. Take care, guys. God bless and happy house hunting. Bye-bye.